David, thanks for being with us. I think if anyone can give us some clarity on this issue, it could be yourself. Thanks a lot.
Thanks for having me, Jay. Really happy to share a message, share some thoughts in such a challenging moment for investors.
I think a lot of Canadians right now across the board, when it comes to witnessing some of the news that we're ingesting, it might be more from the state side, but we do have our own economy happening here. So I guess in short, aside from what we already know, what's actually causing the flux in stocks right now?
So the value of the market is essentially an aggregate of forecasts for what the next 3 to 6 months would look like. So it's short-term future, which has a high degree of being accurate. Things don't change much in 3 months. So that's why you have this big shoot. And in the meantime, we still don't have clarity. So there's a strong chance of further volatility ahead, unfortunately.
Well, clarity that you're providing today with us hopefully will give some kind of content to the people listening, or at least some guidance on what they should be doing. We know in real estate, when clients are a bit worried about something, the phone will ring off the hook no matter what time it is. How is it for you guys right
So
now?
we've been anticipating something like this for some time, maybe not to this degree, but we've been working with our clients to prepare them for these kinds of shocks. We've built a portfolio, again, for these kinds of shocks. So right now we're touching point area. We're proactive. We're out there calling our clients. Not as many calls coming in because we're on top of it, but certainly the sentiment is, one of a bit of nerves, uncertainty, a little anxiety, validating what are we doing. So there's a lot to unpack for our clients in such a strong moment.
And of course, people are at different stages of their investments as well. We look at 2008, maybe that was too new in people's mind, maybe too fresh yet still. We have to think back to 87, where I would have been 6 years old. So I don't really remember how that actually played out in the end. The fact of the matter is the market does
Mhm.
come back.
I mean, the shocks that you referred to, 2008, 87. So we've been through a lot as investors, and although not all of our clients may have been as invested or as in tune in those periods, we've had recent shocks as well, right? The inflation scare of 2022, the onset of the
Of
pandemic.
course.
So it's not in the sense that volatility makes it future volatility more pleasant, but I do think there is some level of accustomedness to this. This is the third large shock in less than 5 years. So our clients are kind of like, oh, we're at this again. Now, whether you're at the beginning of your investment career or at the end, there's still that same reaction we're
Yeah.
noticing.
Yeah, very true. When we talk about preparedness, right? The preparedness of it all is there are options for people
Mm.
at this point in time as well. Maybe putting their money in something that performs better during times like this instead of. And I think that's what the fun thing about having someone who can guide you through the process is you're not doing it alone, and you can really weigh your options. If I'm someone who has enough money or a lot of hope in the stock market at this point in time, maybe I'm getting numbers wiped from the board and big numbers. What would you suggest to me in order to kind of play against or maybe balance out what I'm
Well,
losing?
taking it a step back, whether you're a portfolio manager or whether you're managing your own personal portfolio, it's essential to establish a philosophy. What kind of a manager are you? What's your relationship to risk? What kind of a return are you trying to achieve? And what are you building? So it starts early on in your portfolio process. What does it look like? And that's where you should be asking yourself, what's my level of exposure for each risk level? What am I comfortable with? When you're building that out beforehand, you should be, reaping the benefits of it now. Right? It's like an
Right.
insurance policy. It does you very little good to buy it after the fact. So it's extremely important to have this already built in. Now, that being said, if we're in the midst of the storm, that doesn't mean that you shouldn't do anything. Whatever it is that you do, however, it's important that you're doing this from a place of calm, not a place of panic. You shouldn't be reacting
Yeah.
to what's already happened as much as you should be anticipating what's going to happen next, establishing, clear
Mhm.
signals of when to get out, what to get out of, when to get back in, and what to get back into. So again, it's about a process and a
Right.
discipline in a time where it's very easy to be emotional.
Yeah, I look at the probably the older demographic who are somewhat relying, or maybe are relying on some of their the performance of their stocks to be able to use that interest to live off of. We see that a lot at a certain age. People sell their house, they decide to rent. They're going to live off the investments. Uh, at what point? At what point do we start to panic? Panic. At what point do we say we're going to turn this into actual money?
Well, so raising cash is not a form of panic. Panic is sell everything. And as you've alluded to earlier, in 87, '08,
Yeah.
if you've done that, you've already made the mistake. You've already capitulated on markets, and
Right.
maybe it's not the right investment vehicle for you, and that's okay. But raising cash is not a form of panic. Again, I bring it back to having a pre-established process. We've already raised cash twice this year because of of certain triggers that were signaled on our side, say this is an appropriate time to take money off the table. So even for somebody right now,
Yeah.
if you're worried about what's to come next, and understandably so, you can go into your portfolio and look at, hey, what's not down, or what's only down 5%. I can protect that from further losses. And at a future time, I could get back into stocks that are already down 30 or 40%. Because there is no such thing as
Fair
timing.
enough.
I'm not getting out at the perfect time.
Right.
I'm not getting in at the perfect time. So you have to be really disciplined with even your cash rates.
So even right at this moment in time, it's still an all right time to get in on the market.
It's a very good time to reevaluate what you have, because whatever you did even 2 months ago may be out of date. You may have purchased a stock with a certain vision. That vision may not be intact.
Mm-hmm.
So it is important to revisit it.
For sure.
Not to revisit it under the guise of a headline, but under something tangible. Is the reason why I bought this 2 months ago still intact? And if it is, that's enough sign to be patient, to weather the storm, and then eventually to buy more. Versus something that you may have bought with a certain outlook. I'm going to buy this retail stock because I think the consumer is strong. And all of a sudden, the consumer doesn't look so strong. So maybe it is appropriate to temporarily sell that retail stock and revisit later on.
I was with a partner the other night talking about the market. She's more on the mortgage side of things, and she said she got in at 12, and she's done all right for herself. So no better time to get into the market with the young ones. Maybe this will be a life lesson that they can learn properly through. And if you are doing it alone and you need some guidance, I'm sure you can help out. That's right,
I
David,
think
right?
everybody should use whatever resource they have at their disposition.
Oh man,
We
absolutely.
do that too.
Yeah.
One of the beauties of what we do is we have economists, strategists, portfolio manager, company leaders at our disposition, and we take full advantage of that. There's no reason why somebody that's managing their own stuff shouldn't do the same. Use the people use the professionals the people you trust, to build a consensus. And again, a very difficult time to do that.
So we'll leave it on that, and then just one last piece here. If we're looking at how much longer we're going to be in this, we talk about preparing for 3 months, 6 months. How much longer is this ride?
It's going to last as long as it will. I think what we're going to is fairly unprecedented in recent history. Again, such a large, dramatic overhaul, not just of one country's affairs, but really global affairs. So I think it's important to be humble in this environment, to admit we don't know, and to just be prepared to navigate that environment. It's kind of like driving, right? When you see ahead, you can feel comfortable to go faster. If you're at night and there's fog, you need to slow down your speed because you can't see 5 feet ahead. So that's how you need to invest in this environment with not a lot of clarity, unfortunately.
David, you're a gem. I'm looking at the numbers behind you, seeing if I can see anything performing there positively and where I can go in my next move. We're definitely going to have you back throughout the course of this. Thanks for being
Absolutely
with
thrilled
us.
to be here. Thanks a lot, Jay.